Welcome back to the second half of the day two for the Digital Investment Week organized by the Malaysia Digital Economy Corporation, or MDEC, which celebrates its 25th anniversary this week, established on the 1st of August 1996. Congratulations, MDEC. Moving on, allow me to welcome the next panel session entitled The Future of Investment Ventures, moderated by Mr. Peter Wee, Council Member of the Malaysia Business Angel Network. Over to you, Peter.
Hey, thank you. Thank you, Hasro. Yeah, congratulations to MDAC. 25 years has passed so quickly. The session this afternoon is relating to, like what Jahasro said, the future of investment ventures. So the next hour, hopefully we will have some interesting interactions, and I will give some time for Q&A, maybe 15 or 20 minutes at the end. So let's have a good time. Hopefully you had a good lunch, and you see on the screen that we have very esteemed panelists today. Thanks for arranging this. We will have two ladies, as you can see, and a guy, yeah, handsome guy. Let me, without further ado, let me introduce the two ladies first, yeah, Ben. Angel is a principal of the Hive Southeast Asia. I think some of you may have heard of them. The Hive Southeast Asia aims to co-create the funds and also launch startups in Malaysia, not only in Malaysia, but also in the Southeast Asian region, based on specific themes focus on applications and use cases in functional areas of enterprises, yeah, for companies. So at the moment, the Hive has got three funds globally. One of it is in Silicon Valley, India, and third one is Brazil. Yeah. So their goal is to take ideas and iterate them to find a market fit regionally. So not only Malaysia, but regionally. So ultimately, they seek to create successful local startups and to iterate them to find a market fit, right? So that is, and we have Angel, who is the principal, and secondly, we have Michelle from Quest Ventures. Again, needs no introduction, but let me do the honors. She's a senior associate at Quest Ventures, and it's one of the top venture capital funds in Malaysia. And she works closely with startups to accelerate their growth through a combination of incubation services and programs. So they run quite a lot of programs, and she's responsible for the whole Southeast Asian market and also emerging Asia. And a bit of history of Michelle is that she was responsible before this for international startup ecosystem network development for entrepreneurship that was in Singapore. And she's still in Singapore. As we said, gladly, she's sitting in Singapore. I think the COVID case is better managed, I would say. Yeah, and she has done quite a lot of work and anchored Asia as Singapore as Asia's hub for entrepreneurship. So welcome. And of course, we have our managing partner of NEXEA. His name is Ben Lim. You may have seen him in quite a lot of forums. He's a partner at NEXEA, an early stage accelerator, angel network, and also VC. So NEXEA has invested in more than 35 startups thus far across Southeast Asia and is known for creating value in their investments. And NEXEA is backed by experienced entrepreneurs who have done the M&As and IPOs and are CEO of public companies. Yeah, Ben has actually founded NEXEA together with a few partners and since managed deal flows and investments into startups. He has deep experience in validating startups from MVP to investability as well as fundraising for startups. Yeah. So panelists, welcome to this afternoon's session. I guess if we were to look in keeping with the theme of investment, the future of investment ventures, I think we look back and the panel, we were talking a little bit about how the landscape has changed a little bit or quite a lot in the last 16, 17 months since Malaysia had our lockdown, so to speak. Yeah. I guess the question we have in our mind is that the lockdown has impacted a lot of companies, right? We know this is a known fact. In fact, in March, there was a joke which was saying that what made you digitize or innovate your company, right? Is it your CEO, your CTO, or is it COVID-19, right? I think that's a joke among the Malaysians. You would see, yeah, it was the COVID situation which accelerated this. So in any disruption, even in the environment, there comes what I will call it oppo threat, so to speak. So it's a portmanteau whereby it's an opportunity as well as a threat. So you can see in the landscape, even in Malaysia, and I'm sure the two ladies and Ben, you see this happening not only in Malaysia, but Southeast Asia. Some see this as a threat and some see this as an opportunity. Yeah, a lot of companies have done digitization and also digitalization. Some have pivoted and some has not. So maybe on that score, I mean, one of my first question I would ask all the panel was, how do you see the digitalization or digitization efforts in Malaysia? So maybe I would start with the ladies first. Maybe Angel, would you like to see what your experience has been in the last 16, 17 months since Malaysia had this lockdown, so to speak? Angel?
Hi, thank you very much for this session. Definitely, thanks Peter again. Just a quick one from my take. I feel like our digitization efforts for SMEs are really highly depending on the rest of the corporate partners out there, because like the market acceptance it's still pretty. We're heading there, definitely. The lockdown and everything, the COVID situation definitely speed up a lot of digitization among SMEs, industries, enterprise solutions. But market acceptance rate is still low. But that's probably the reason why Ben came up with Corporate Accelerator, where we really engage with corporates itself to really bind that up with startups and solutions that can actually benefit the organization. And even in the Hive, we are also very highly focused on co-creating with corporate partners. So I guess at this stage is really we need to have enough market acceptance from not just the consumer side, but also definitely the larger businesses, the medium enterprises out there to really accept and to really just use more startups into their ecosystem and not
Let me hold you on to that question, right? Just a quick one. I mean, isn't COVID a good enough impetus for them to say, hey, I better change, I better bring new ideas for sustainability purposes, right? So what do you think are the SMEs and large companies in your mind? What's holding them back?
I think that's definitely it's very new. That COVID situation happened very sudden. It's just out of the blue, and a lot of them are still not prepared to fully go into to really adapt to the new digitizing era, and there's a lot of stakeholders that is involved inside it. But like even for SMEs, there are many SMEs that are lack of the resources to even invest into technologies. That's the reason why they always use cheap labors to really run their operations manually, and solutions to really support the digitization of these SMEs are not worthy enough because of their larger potential market size. But because I really think that there are still a lot of SMEs out there that are unable to access financing and from traditional lenders, and with definitely with Penjana Capital and everything, hopefully we can provide more affordable solutions for this kind of SMEs out there, and definitely to make these SMEs owners out there to be more bankable and to really provide more solutions to benefit them.
Okay, thanks. So the takeaway from me is that, hey, one of the big issues is access to capital, right? And maybe even expertise. Let's, Michelle, what do you think? What do you see?
Yeah, I think I do agree with Angel. Like maybe for now the SMEs might be a bit resistant towards digitization, but I think in terms of how the digital economy in Malaysia stands, I read from a report that consultants value it about Malaysian ringgit 270 billion, so that's USD 63 billion, and that's already like 18% of Malaysia's gross GDP. So I would think that even though the adoption rate is low, but it's quite significant already, and maybe it's at its inflection point. So I think that's probably due to consistent effort from the public and private sector, because I understand that the public sector also pushed for digitization. In the news, I think Matrix leveraged on digital technology to conduct export promotion programs. And they also collaborated with the UN Development Programme to revitalize rural economies through renewable energy to support the rural and Orang Asli communities to begin their export journey, primarily via e-commerce. So I think that's something that is sustained, not just a one-off thing, because from what I understand, there's also in 1996, the Multimedia Super Corridor, National Strategic ICT Roadmap and Digital Malaysia, National E-Commerce Strategic Roadmap, Industry Forward, and the National Fiberization and Connectivity Plan. So I think it's a consistent effort since 1996. And I mean, there might be a small gap in between, but after starting off in 2008, they keep pushing forward this digital economy. And I think maybe we are seeing the fruits of this consistent and sustained effort to grow it. And also I saw that last year, Matrix conducted e-business matching for 1,365 companies, if I'm not wrong. Yeah, so I think that's pretty amazing stuff that they're doing to kind of pivot for COVID-19.
I guess from your business, I mean, if you look at Crest, you have got funds, right, in the region. With funds number 1, 2, 3, 4. It's very specific ones. I guess the point I wanted to clarify with you is that you mentioned that there is a public push for it, right? Like this forum as well to try and push, right? How important is the collaboration between, say, public and private, right? Because you can't just have the public side just saying, okay, I give you money, but the private side must also play their role. I mean, how do you see that merging?
I would say that definitely some form of support from the public side would incentivize the private sector to take on certain schemes. I would think that not only should you incentivize the corporates to work with the startups, you should also incentivize the startups to work with corporates, because it has to be two ways, because if startups think that the corporate would take away your IP and they will actually do something that is not so nice and eat you up, it's not going to be a conducive environment to foster open innovation. So I think on that front, maybe the private sector can have a more comprehensive view and support both the big boys and also the small boys when it comes to open innovation.
Great.
Yeah.
Okay. Yeah. Thanks. That's really great insights. And Ben, Angel did talk a little bit about your corporate accelerator program and all that stuff, right? So there is a big disjoint as far as my experience concerned between the confidence that the startups want to work with corporates, and more importantly, the corporates want to work with startups. Like, why should we work with them? We don't know. They wake up at 11 o'clock, I wake up at 7 o'clock, and we can't work together, right? So how do we work together on that? I mean, any ideas?
Yeah, it's really got to come down to those that are already willing to work on it, right? So it's not every startup that's ready to work with corporates, and not every corporate is also ready to work with startups. So there has to be a good matching there, and that's partly where we come in, right? But this should be something that the market drives on its own later on. It can't just be supported by players like us, or even our supporting ecosystems like Magic and even NDEC, right? So I think at the end of the day, it's like what you hinted at earlier, private and public partnerships. That's definitely very, very important. I think Angel was right as well. That there is resistance. We do see, we do see on the corporate level some resistance sometimes in terms of even something as simple as bureaucracy, right? So some processes that take so long that causes the relationships between startups and corporates to sort of break down a little bit. So these are the things where we need to start thinking about it and working around it, so that a lot more digitization can happen, a lot more startups can be supported as well. I think all these are really important, things that must happen in order for digitization to really take place.
I'll hold you one question before I go to Michelle and ask her something. But Ben, I mean, we have got, you say that enlightened corporate people, right? How does that enlightenment come from? I mean, in your experience working with so many corporates, right? Those who are enlightened and those who are not. What is the big difference? What is the gap there?
Yeah. So I'm assuming by enlightened you mean that they're more open to digitization, and they're more willing to invest, right, in automation and digitization and so on. I would say it usually starts from the top, right? So either founders of companies, or even if they're public listed and the founders are no longer there, certain corporates have on the board level have taken initiatives on innovation, corporate innovation, in order to sort of repair ailing parts of the corporate, right? So some corporates, if you can imagine, would have many departments or revenue sources, and some of those revenue sources are new and growing still, so those are healthy. But some revenue sources may be ailing and they may be going downhill. Some may be from sunset industries, right? So this is where corporate innovation can come in. This is where open innovation would help as well. And yeah, that's sort of the area.
Great stuff. I think the takeaway from me is that the founders themselves or the CEO must be enlightened, right? And must realize that this is important. Thanks for that. Michelle, I mean, if you deal with companies as well, right? And as well as individual as far as your funds are concerned. I mean, what are the new trends in the last 17 months that you see corporates coming in? Because when I look at your profile of the funds coming up, you talk about sustainability and you have got some very specific funds. I mean, what are companies looking for when they want to invest in this startup industry? I mean, through your funds, of course. Yeah.
Okay, thanks, Peter, for the question. I think if we're looking at VCs specifically, we are actually looking at those sectors who are riding on the tailwind of the COVID-19 and the more anti-fragile ones. So you would see that actually social companies, commerce companies, agri-food tech companies, and you would also see supply chain logistics riding on the tailwind together with healthcare and edutech. I would say that these are the sectors that VCs are focused on right after the pandemic. But after a while, everything just returned back to normal. Like people started to go back to the AI, the autonomous vehicles, and also EV vehicles. So I think at one point in time, everyone decided to jump into the bandwagon of what's riding on the tailwind of COVID-19. But after that, some of the sectors that they believe in will be resilient to COVID-19 also continue to get investments from the VCs, and it's in the growth stage rounds. So I think that's pretty good observation that we're seeing. And last year, I think quite a number of funds also closed. I think over 100 million funds are closed, and there's a lot of dry powder in Southeast Asia right now. So definitely good time to be raising from VCs. But if you're talking about corporate innovation, I think there's also more corporates investing into startups. But I think one thing to note is that they probably would want you to do like pilots and projects with their companies, and definitely you must take note of whether there's any exclusivities clause that will kind of restrict your growth.
So are you suggesting that perhaps that is almost a confidence builder, isn't it? That you do the pilot rather than straight away I acquire or I work with you, but let's do on a small project, a pilot first to see, yes, this works, and our marriage, we can talk further, right?
I think typically they will embark on like a POC first, and they will not put in any investments, but they will dedicate like someone to work with you to like solve a problem in their business units. Then after that, maybe you unlock some milestones, and then they will make the investment or into the project or into your company. So it depends on whether they have a CVC arm or they are just working through their corporate innovation arm.
Or if this is an Olympic swimming pool, they want to just dip their toe first, right? By doing the pilot school. Maybe thanks for that, Michelle. Great stuff. Angel, what do you reckon? What do you see?
I think I definitely agreed with what Michelle has been saying, and of course, for corporate innovations and corporate adapting to really digitize the entire business, really, I reckon that most of the corporates tend to be slightly more. Perhaps let's just do this. Maybe I would just say that there's a lot of like mismatch between the startups and the corporates itself, and a lot of times that the ideation and the building up of the solution is it happens first, and then you validate with a corporate later on. So what we tend to do in this entire in our fund, we're not just a VC fund, we're actually co-create with our corporate partners such as General Electric, such as Bosted Holdings. We validate what is the problem statements there first, and what are the solutions they really need to complement into their business, or what are the solutions they are really currently looking for. And then we go to searching for what type of startups to match into their problem statement. So I think really there's, investing in early stage startups, there's a lot of funds that are really being thrown into later stage, more mature startups where the attraction and everything have been built already. And there's still a lack of funding into early stage startups like pre-seed to, pre-series A companies. And really to encourage more of this, this deal floor within this early stage companies, investment definitely makes a high impact in it. And second, definitely corporate adapting, really using solutions that was built, I would say that really to complement, match them with the right startup that can actually work together along with. And that's my take.
Thanks for that. I think when we work with a lot of startups, we tend to fall in love with our own idea, right? And then you say, oh, why don't you buy this from us, right? So what's going on? Because we never understand what GE in your case wanted, and then we're trying to plug the solution into the problem. So no wonder it doesn't work, right? And gives a bit of not so much confidence in that. Talking about Ben, talking about investments, right? I guess you sort of hinted that corporates are looking at new revenues, new ways to innovate and to sustain themselves. I mean, obviously, in this COVID situation, and like what Michelle also hinted, is that going on the coattails of COVID-19, and then maybe when this pandemic blows over or subsides, what happens? So do you see new trends coming up, and which other industries where people are starting to, hey, this is interesting that we all as investors should look at?
I think it's going to be roughly the same. It's going to be AI. It's going to be still a lot on cloud infrastructure. That's still a trend that's coming through. Strangely, even though it's been there for quite a while. So I think these are what we call the mega trends, and it's going to continue for a while. So I don't think that's going to change anytime soon. Pandemic or not, it's not going to change until a next wave of breakthrough technologies start to come through. So for now, yeah, I think it's going to be the same.
I guess, Ben, one follow-up question is that Michelle had also mentioned earlier on things like agri-tech, fintech. I wrote down edutech, AI, and big data. Especially big data sounds very sexy and very nice. And I mean, is that something that has got a great future, especially in Malaysia? And I see some startups already looking at definitely agri-tech, fintech, edutech. Is that a good future for someone to say, hey, I put money in that, or even corporates to work with them on that?
Yeah, definitely there would be startups there. If they can find a space, if they can find very practical use cases for their products and for their customers, and that would drive market demand, right? And if market demand is there as well, then these would really start to come through. But at the end of the day, I think for any startup to succeed, it's to either they have to bend towards the will of the market, right, or they're able to shape the market. So sometimes entrepreneurs can do that, sometimes not. So I think at the end of the day, it's going to be, it's got to be customer centric. It's got to be from the market as well.
Yeah. Okay. Thanks, Ben. That's great insight. So the takeaway again for me will be, hey, it may be good in one area, but Malaysia must be ready, I guess, right, to have a market for it, and also the market acceptance, right? I mean, just to give you an example, maybe 20 years ago, when you say, let's drink mineral water, people say you're mad to drink mineral water. But at that point in time, we don't feel affluent enough, and maybe the cost was too high. But now when we go to a Petronas station, we buy 2 dozen without thinking, right? So, okay, great. Yeah, great stuff. Angel, can I ask you something relating to this trend I hear in the startup scene? And a lot of the startups say, yeah, my play is big data and AI, right? Big data and AI, of course, becomes more and more important because of digitization. That means that more information is being generated. Yeah. So, what are your views on moving forward on people who said, hey, I want to be in AI and big data? What are your thoughts about it? Yeah.
Thank you very much for the question. It's very interesting. A lot of times, typically the description is always started with, we are an AI company, machine learning company, but we tend to forget what is the problem statement that they're actually solving. But we only focus on, they are AI, machine learning, artificial, this kind of companies. And yeah, for our end, really more important, really, again, back to what kind of really based, we select our investments really based on the problem statements, and how can we really commit to their growth with a long-term orientation. Not just AI company can be applicable in different industries. So our investment thesis is pretty agnostic, and we typically look at more, I would say, universal issues and rather than sectors focus because the idea is really not to focus on what kind of deal that we what kind of sectors that we want to invest in, but more on what kind of business that they are supporting and the problems that they are solving as a result. And ultimately, definitely, that we don't want to end up in a valuation war against the rest of the Southeast Asian VCs out there.
I guess when you talk about big data, some startups, when they look at it, they say that, wow, I've got a trove of 15,000 customers, and that to them is big data. And when I was running a company, when I said, oh, I got big data because got 15,000 machines behind me, the guy who's telling me said, we are looking at least 10 terabytes, which I just put my hands up. So I think what you are saying here is that, it's what problem are they solving, right? You using the data. If you're providing big data services, then I would ask you whether it's storage services or analytics services and so on and so forth.
Yeah.
So it depends on what problem you're trying to solve. Michelle, I mean, one question for you is that of all the sectors that is being branded around under IR 4.0, like agri-tech, IoT, and all this. So what resonates with you? You think that if I have got fund number 8, this is what I want to focus on, apart from doing the accelerator and working with startup. What are you looking at?
Thanks for the question. I think if I were to look at the two sectors, maybe I'll look at B2B SaaS, and because for the simple fact that it can be replicated and scaled across Malaysia and the region, mainly because of its self-service nature and because of all the enterprises that are available across this region, especially the SMEs, which is largely having some inertia. If I could find some solutions that could really help with adoption and really get adopted by a lot of the different companies across the region, that is a huge opportunity. So that is one, B2B SaaS, and I think the model is highly scalable. So definitely we'll look into that. And the next one would definitely be consumer and social, because for social media penetration in Malaysia, it's 81% and about 26 million social media users in Malaysia. So if I'm looking at Malaysia, social and also consumer-based type of companies, I would definitely take a look at them. Yeah, so that's something that I would focus on if you let me choose two sectors.
Of course, as a Malaysian, we are always wanting to hear yourselves from Singapore say, and we focus on deep tech and AI in Malaysia. Why is that doesn't come into your radar?
I would say that deep tech and for deep tech, including AI and the different IoT cloud, it's horizontal, I would say. It cuts across various sectors, and definitely if we do see it in the sectors, like how you are applying it in the different sectors that we are focused on, then obviously we would definitely give you some brownie points for that. Yeah.
Okay, I think that's interesting. I would have liked to say that I thought you would say, hey, Malaysia is now the hub for deep tech and in machine learning and so on and so forth, right? I think in terms of that score, thanks for that. That's great stuff. Ben, any thoughts on what the two ladies have mentioned?
I mostly agree. So like I sort of hinted at earlier, most of these AI and deep tech solutions, they've got to solve something at the end of the day, right? So if it's a startup, let's say, doing AI solutions, but not focused in any particular industry, I've seen a few, then they're doing AI for literally everything and depending on clients' needs, right? So then at the end of the day, they're not really having their own product. They're providing a service for developing AI solutions, right? So companies like this, at the end of the day, it depends on their time put in, right? They are trading time for money, and it's not something where they can build once and sell 1 million times. So this is where it's not as scalable, and this is where VCs definitely prefer companies that incorporate AI into products that are like Michelle said, software as a solution, services, which they could sell many times and replicate it across the region pretty quickly as well. So I think at the end of the day, VCs are looking for companies that are not only scalable, but doesn't cost too much to replicate, and where they're able to go across boundaries, right? So a lot of startups we find can cross geographical boundaries. They can go into different markets with different laws, different kind of cultures, different languages as well. So and that's the Southeast Asian market for you, right? Every country has a different law, has a different language, different culture as well, different mixes of culture, in fact. So it's got to cross a lot of these in order to have a large enough market size, right? So Southeast Asia, for example, put together, all the countries put together is larger than China, but the advantage of China actually is that they all speak one language and you can build one product for the entire market. For us here, it's a bit more challenging, but it's also an advantage I see, where it's not so easy for the US guys or the Chinese guys to just come in and try and take our market here. We've really got to fight and integrate many cultures and many languages into our systems here, whereas they've only needed to build it for one language and one sort of demographic at the same time. So yeah.
I take your point in terms of us being startups in Malaysia to scale, and it's something where you look for where it's quick, scalable, and you can replicate it. Obviously, probably relating to technology, right? You have got, I know that you have got quite a few of your startups in your stable of, you have, I think maybe close to, you were mentioning 1,000, 2,000 in your database, and your organization is mentoring close to 80, 90 at least, right? Startups. How do you see Malaysian startups now gaining the confidence to go into outside our shores? So what is it that what is needed, or even what do you see them having to go outside, and what makes them be confident enough to go outside of Malaysia?
That's for me as well.
Yep.
Okay. So for startups to have the confidence to get outside, a lot of times I would say they are overconfident, right? And they, even without validating a product, I've seen some startups immediately expand overseas just for the sake of expanding. So that's definitely not a great idea. You, as a startup, you will want to make sure you really solve that problem for your customers first, with one focus target market, because as soon as you go to a second country, that's a different market speaking a different language probably, and even if the across Southeast Asia the main business language is English, you're dealing with very different cultures, right, and very different markets as well. So you don't want to focus on two different markets at the same time. That's just going to split your focus a lot. So I would really advise startups to win one market first before going on to the next few markets. Have a stable home base before you sort of replicate that across. Otherwise you're trying to build two systems at once, and one breaks on this side and then on the other side, and you'll find yourself juggling something like two startups at the same time, right? Which is never a good idea.
Okay, yeah. Thanks so much. The takeaway again for me would be good at what you do in your home market. Establish yourself before going on to the overseas market, right? Because it is probably a challenge. What works in Malaysia may not necessarily work outside, but you build your confidence in Malaysia. There's one of the questions which is being asked now. I'm not sure who will take this. Any of you good people. The question is that, any examples of good investments so far adopted involving circular economy? And if you look at circular economy, it sort of means that the economic system that tackles things like global climate, biodiversity laws. How do we manage waste? Almost like social impact type of things. So any one of you, do you see this type of things coming in? I know Quest is looking at, I think, one sustainable venture, right? I'm not sure what that means. So what's your focus rather? Yeah. So do you see this? Because sorry, Michelle. Because normally as a venture capitalist, right, in a place of low returns, now the interest rate is so low, people say, hey, we better put in this. But if you look at social enterprise or circular economy, hey, can't make money one. So what is your view, Michelle? Sorry, thanks.
Thanks, Peter, and the person who's asking this question. I think in terms of VCs or private equity, right, we're all actually looking more into impact investments right now, those that adhere to the environmental, social, and governance. There are metrics that are used to measure, and you can look at the GIIN to look at the different sectors that could be of interest to the impact investment side of things.
Mm-hmm.
And I would say that for Quest ourselves, we do look for companies using the double bottom line or triple bottom line kind of assessment. So apart from financial, we also assess what kind of environmental or social impact you might have. So that's something that we do look at through our investments in Malaysia. I would say through Scale Up Malaysia Cohort 2, we also invest in some companies that tackles the ESG side of things. For example, there's Earth. So we're doing e-waste recycling and digitizing this whole process and incentivizing the consumer. So from a very informal economy, we formalize it and make it, have an invisible hand driving this whole industry. So I would say that is one of the example that we invest in impact startups. And you could also look at other companies like Homa, which is also in Malaysia, that we invest in these companies for those second-hand furniture or used construction materials,
Mm-hmm.
or excess materials from construction or furniture. So there are this kind of companies that we do look at to assess not just their financial bottom line, but also the impact that they deliver in terms of environmental and social impact.
I guess thanks for that. I got a follow-up question for you. I mean, no day actually passes by opening up the newspaper. Okay, I'm old school. I still subscribe to the papers, right, to help my newspaper vendor, which doesn't talk about ESG, right? So you are saying that ESG and social impact is all coming to the forefront. So as an investor, say for myself, I want to invest in your fund, for example, in relation to that focus. Does it give me a better return, or do you have to give a better valuation because now it's the in thing? I use the word in thing. How does it play out in terms of financial? You use the word triple bottom line, right? People like us in the finance will always say, hey, one bottom line, where you got three, right? So how important are the other two bottom lines in terms of your returns and also valuations of those investments you make? Thanks.
Yeah. Okay, I think let me address this in a way that a lot of people are seeing sustainability being intertwined with your business performance. So I would say that if you don't take care of the environment and the social side of things, your business might not prove to be very sustainable, and investing in your company might not prove to be very rewarding in the long run. So that's why a lot of investors, a lot of businesses even, they have decided to incorporate ESG into how they run the company and how they invest in other companies. So I would say that the sustainability factor would be key for people who are looking to invest and also like run companies that are impact driven or incorporated into whatever they are doing. So I think it's for a long-term return instead of a short-term one. And I would say that actually, if you look at Grab, it didn't start out as a social enterprise, but look at how it has uplifted so many people across the world, across the region, giving income streams to some of the less privileged people. And I think that is something that is pretty amazing. Like, you didn't start out to be a social enterprise to give low returns, but in the end, there is an impact aspect to it where it also contributes to the social performance of the company.
Thanks for that. I'll move to Angel before I go to Ben. Angel, if I were to say to you, this altruistic purpose, like what Michelle is saying, is very nice, but I leave it to some other people to go and do it now. I guess what are your thoughts? Because if there is a social push to that, then you might be left behind, right? But if I'm old school guy, I would just say never mind, let other people do first. Do you think the impact could be? You be altruistic, I'll be practical. Thank you very much. Hopefully my returns are better. Angel?
Thanks for the question. Is as of for our fund itself, I think the misconception of people thinking that investing in ESG companies or investing in this kind of circular economy companies doesn't make money, that is a wrong misconception. And a lot of these companies that I met, they incorporate some of these this ESG focused areas into their business model, and a lot of times they do make money, by not through perhaps marketing, perhaps do even some of that I met they are doing with supply chain financing, which I'm pretty surprised on how they really incorporate ESG component along with business model that VC might find sexy. And so I think one of the misconception everyone really have to kind of slowly let go is that investing in ESG doesn't mean that you're not going to make money. And as a matter of fact, maybe in the long term, the returns might be even higher.
Interesting. Thank you so much. Ben, what are your thoughts in terms of, I would imagine this is a new trend, right? Because ESG is coming into the picture in a big way. What do you think?
Yeah, Michelle hinted at a very good point earlier, saying that it affects the long term, right? Because VC investments go through 5 to 10 years of a waiting period. So hence we've got to think many years ahead when we make even though we make the investment today, right? And ESG is definitely something that's going to pick up, I believe, and it's something that it's something that I believe to be a good thing, not just for the economy, but also for the entire sustainability of the ecosystem and social welfare and so on. So I think for companies to or even for startups to ignore it today, they might be making a mistake there, and I think they would eventually have to rethink their decision not to go into it as well in the long term, because I think at the end of the day, it's something that's being heavily considered more and more. I think it's definitely a good long-term thing to start, at least to think about it for now. We know that it's not really in effect yet, but it's something that's definitely growing, and it's probably going to stay, right? So it's a good thing to just at least think about it, today.
So I know you're running a corporate accelerator program now, right? So the corporates will come with like, wow, I want to delve in this type of startups, and you go and find all those startups. It could be 50, 60, maybe 200 startups. I think you were mentioning the other day that you're looking at 1,080 startups. Like, so do you say that, look, I've sieved through 60 for you, sir, company XYZ, and please, I encourage you to look at ESG type or sustainability-ish type of things, or just say, never mind, just come in. I mean, how do you include that in, or do you include that in at all, or it depends on your customer?
Yeah, so it already there's already corporates asking for it, right? So we've got one that's headquartered in Europe, and they have interest in ESG companies. So it does come from the corporate as well. For us to introduce it to them and say, hey, you should look at ESG related startups, that's not what we currently do. but we definitely sort of encourage them to have a look as well.
It's almost like you encourage them, and it's almost like a double take, right? It depends on the corporate and the company, the startup, and then whether they are incorporating this type of elements in their business model. Right? So yeah. Without you guys noticing, actually, I'm incorporating some of the Q&As in already without stopping it quite clinically. One question has come out. I think I'll open it. It says that the person asked, how different are the metrics to evaluate for investments in ESG focused startups? I presume this is vis-a-vis non-ESG focused startups. I think how do you evaluate for investment? Do you evaluate it differently? I guess one part is financials, the other part is the qualitative side now. So anyone of you? How different are the metrics to evaluate for ESG focused startups? That's the question.
Maybe I could just jump in. I think for ESG is just incorporated into what we have been evaluating companies for. So we probably wouldn't be looking at lower financial performance just because you have the ESG aspect tagged to it. But if you actually have lower returns than your competitors because of the ESG side, we can take it into consideration. But obviously, we would actually expect you, with our support, grow in a way that's kind of more competitive and would be able to still become the category leader. We don't expect the company to become slack because we have the ESG side of things. And if you want to look at some of the metrics that evaluates ESG, you can go to the Global Impact Investor Network. The IRIS Plus is the generally accepted system to measure, manage, and optimize impact.
Can I just get you there? You say that if I got two companies the same, and one is not doing so well, but it has got its ESG sorted out on, being aware of the need for ESG to quote unquote, you might give some compensating thing for them, right? Are you saying that?
I think maybe in a sense where your competitors are going to 3x in 12 months, but you probably are going to 2x in 12 months. But you have incorporated the ESG component, and we see that you're able to grow, ensure your growth more sustainably. And also with our help, we could help you 3x, 4x, or 5x and be more competitive against your competitors. Then why not? We'll go in and we'll help you grow and beat your competitor without the ESG side of things.
So you're saying that given everything's equal, we will give you a premium in terms of being ESG issue in that sense.
Yeah, because I think the ESG part actually can turn into actual monetary value. So that's what we are seeing the potential in these companies.
Okay, thanks. Ben or Angel?
I saw Ben unmuted. Maybe Ben, you want to go first?
Yeah, I thought ladies first, but I saw he was unmuted, so I did Ben first. Go ahead.
So ESG metrics can go into quite a few things actually, right? So in terms of the environment, for example, I think energy efficiency or carbon emissions could be a really easy one. In terms of social, it could be as simple as labor practices, or even governance. It could be even as simple as management remuneration, right? Or even diversity within let's say the board, right? So it's not necessarily going to impact profitability or the growth rates all the time. Just like Angel pointed out earlier. So I hope that clarifies with regards to investors and ESG. It's something that's a little bit new at the moment, definitely. It's something that's that investors have to think about more, and sort of try and figure out where they really stand along that ESG spectrum, right? How much ESG it should be in place, and exactly how do you balance sometimes between the profitability and ESG metrics. If it's too much ESG, or maybe even too much on the social enterprise side of things, because sometimes those two do overlap, then it's going to be tougher for investors, definitely. But like Michelle said, if it's something that wins out at the end of the day, in the long term, and that's what we're really betting on, right? It's like 5-10 year ahead of time kind of bet. Then so be it. Right. So I hope that clarifies on the metrics as well.
Great stuff. Angel?
Hey, thanks. Thanks, Ben, and thanks, Michelle, for pointing that out. I think a lot of people probably get confused on ESG is non-profit. So maybe we should really scrap that off. And ESG doesn't mean it's a non-for-profit organization. And we invested in companies that help upskilling on the B40 community to really increase more field technicians. Those are ESG companies. We are also invested in another company that works along with digital twin solutions to predict water pumping optimization for renewable energy and stuff. That is also ESG. So I think a lot of people only think of ESG as in giving and not taking. So there's so much more to really think. This entire industry is so wide, and right now it's just starting. And of course, definitely don't think of ESG as non-profit organization. And I feel like there's a lot of VCs, like similar like Quest Ventures and also Ben in NEXEA. Every one of us kind of understand the importance of ESG, incorporating these elements inside the company itself. And by the end of the day, the company, the founders itself, definitely have to have a plan. Like, why is the profitability currently low compared to all your competitors? Maybe you have a plan to, tackle it. Maybe in the 5 years you'll be ahead than your competitors. So it's really based on the company itself and how they really, really bring scale up their solutions. Yeah.
Okay, we have about three minutes left. Very quickly, the learning points I have got is that, hey, we run a fund, right? We need to make business, right? To make returns, right? So even though you have this ESG-ish or social impact, it's still got to make money, right? So I think that was the takeaway. So I think maybe the last, we got 2.5 minutes. Maybe I would start. The ladies must have the last word, right? Ben, in my house anyway. Ben, maybe to set the context, and I'll go through down to Michelle, and then we go to Angel. Is this? We are now in COVID situation. It's almost very blurry, right? So what do you look for in terms of getting clarity in this smoggy situation? I mean, what is your aspirations in the next when it opens up? Maybe I start with Ben.
Well, for us, the way we evaluate startups, the way we find startups, it's back to startup fundamentals, right? So it does not change pandemic or no pandemic. It's just that during the pandemic, certain industries do suffer. For example, tourism, right? And with tourism, for example, if the market size sort of shrink overnight, right? And at the end of the day, when we look at a fundamental like the market size, and if it shrinks, then it's something that is something that we cannot really look at in the meantime. But if it's something where we can expect the market to return, and you're a startup fundraising for a tourism startup, then I would say show us the plan, show us how you're gonna sort of make a comeback, and how we as investors could actually help. and if it makes a lot of sense to us, then
You would invest.
definitely, yeah, we can invest.
Okay.
But otherwise, it's going to be challenging.
Thanks. Michelle, 30 seconds, and then Angel, 30 seconds. Sorry, we are
Okay,
time pressed.
we're going really fast. I think similar to Ben, startup fundamentals, that's the most important. Then also the total addressable market and the growth of that market in and after COVID-19. Then as usual, as NEVC's replicability, scalability of with your existing market and outside of your market, and also the market defensibility through your moat.
Yeah, fantastic. Angel?
For me, probably it's the same as Ben and Michelle as well, but what we really wanted, we really think of, startup founders that can survive the pandemic, even despite that they are actually in a tough situation. It really tests out the fundamentals of the founder. Can they really bring their startup through the pandemic itself? And when they can, they have very strong fundamentals, and definitely they are one of the few companies that we should definitely look into. It's not difficult. It's not easy to be unprofitable for close to more than 1 year, right? The entire COVID situation in Malaysia, yeah. So definitely kudos to those startup founders that really bring the employees through. And probably to end up this in this session, back to definitely with our corporate partners and all, and really hopefully that our corporate partners really open up to more to working with startups, and
that's important. Yeah, that's important. Great stuff. So I will leave the session to close it, and to say very big thank you to Michelle, Angel, and of course Ben. Yeah. So back to you, Hasro. Yeah, Hasro. Yeah. Hope the listeners found it very useful. Yeah. Hasro.
He's gone missing.
He's gone missing. Yeah. I think the session has moved to the plenary already.